Hi, and welcome back to Rick's Room. This is the end of the day conversations that we all love to have at conferences, only a simulation of that here online. Today, my conversation is with my friend, Kevin Breeland. Now, it's an unlikely friendship because he's actually really smart, but I do have a few of those smart friends. Right now, he is Mortgage Development Officer and Loan Originator for Happy Mortgage. That's a division of Happy State Bank, and I'm proud to bring him onto the show today. Kevin, thanks for being with me.
Well, thank you, Rick. That's very nice of you to say. Not many people would ever accuse me of being smart, so that's great.
And yet, you've been officers of national trade associations. You've worked for all the top originators. Yeah, you definitely fall into that category. And thank you for spending some time with me today, Kevin. So you're on the front line. You're right there with the borrowers, trying to help them get into homes. Talk to me about what's going on out there. What are you seeing in the market today?
Well, what I'm seeing is I think the market is still on the slow side, and I do think it is a buyer's market. I think it's a buyer's market because marketing times are taking longer, and when you have that situation occur, it opens the door for buyers to have a little bit more negotiating power. And I have seen that, at least here in my markets, and I lend all over the state of Texas and also all over the country. But the focus, obviously, is the state of Texas, and that's where I've seen in markets in Houston, Austin, and Dallas, and Panhandle of Texas. That's what I've seen consistently.
Well, I know, Kevin, Texas, huge market. What is it, the second largest in the nation?
Yes.
Usually fast moving. Austin, where you do a lot of business, was so hot a few years ago. If you didn't know about a house coming on the market, you weren't even going to get into the process of bidding for it. What's happening down there now?
Well, that has slowed down, and it has slowed down quite a bit. Now, that's not to say there aren't some pocket neighborhoods where when a house comes up for sale, if it's priced right, it's going to move pretty quick. But overall, the entire market is slower than it has been. I do think the buyers have a little bit more control in the process in the Austin market. They can get a few more concessions that were not even talked about 3 years ago, and that's not bad for the buyers. It's not bad for the sellers, to be honest about it. I mean, you put your house on the market to sell it, you want to sell it. So giving a few concessions here and there doesn't mean you're losing money. It just means you're helping someone out who can now buy your home and make it their home and start a new series of dreams and wishes and make all their dreams come true as well.
I love that. I love that, Kevin. Now, I've bought a couple of homes with my wife, actually more than I wanted to, but she makes me move from time to time. Mm-hmm. So as a consumer, we like to keep things simple. It's just a matter of interest rate. It's a matter of do my debt to income ratios look right and that. But it's really, housing affordability is much more complicated than that. What do you think consumers don't really realize about how all this works? And what a couple of interest rate reductions this year, which a lot of people are thinking might happen, how that might impact the market?
Well, I think what most people misunderstand when they're thinking about buying a house is, they go on to one of our friendly mortgage calculator sites and they put in the information and they get a house payment of $2,850 a month, and they think that's it. But in most markets, you have another $600 to $1,200 in taxes and insurance that goes on top of that. So now that $2,800 a month payment is a $4,000 a month payment, and that changes the affordability of that particular property a great deal. And that doesn't even take into account, what homeowners insurance has done over the last 24 months as far as affordability. In a lot of markets, it has doubled, maybe even tripled. And so that is playing a much bigger role than it used to. Now, having said that, interest rates coming down is certainly going to help those types of things. It'll help with the affordability, making the principal and interest payment a little lower, so you have more room for the unexpected taxes and insurance costs that you're going to have. But what really happens with Fed cuts is these cuts are kind of already baked into market analysis to begin with before they happen. So the problem with a Fed cut is you can have, like the last Fed cut, that was already in the market, so rates didn't change. But based on what the Federal Reserve had to say, we actually saw rates move up a little bit during the day. The 10-year yield actually, there was a sell-off, and that rate went up, and so at the end of the day, that created a situation where mortgage rates were not as good at the end of the day as they were in the morning. Now, this next Fed meeting, that price cut has already been baked into the analysis as well. But I think that what we'll find is the Fed speak afterwards will be a little more bullish towards further cuts. So I do think there will be one more in December, and that will be setting the stage for hopefully a better 2026.
Well, very good. Well, what are you planning for? What do you think your business is going to look like or do in the coming year? How will it be different from what we've had over the last year or two? Or are we looking at more of the same for a while?
Well, I think 2026 will be better. I think the NBA conference, they were pretty bullish on 2026. I'm not quite that bullish on 2026 because you still have an affordability issue. Now, obviously, in some markets where you have a lot of high paying jobs and all of that, the affordability may not be that much of an issue. But the market that I work on the most is in affordability and first time home buyer, move up buyer, second time home buyer, that type of thing. Affordability, especially in a market like the greater Austin area, is a real issue because your median price range is well over $400,000. And while incomes, there are a lot of places that have high paying jobs, there's also just as many places that don't.
Hmm.
And so the median income, I would say, for an average Austin family probably is not even $100,000 a year. Now, that's not to say that in some parts of town it isn't. It's probably higher than that. But I would say overall, if you took the greater Austin area, Travis County, Williamson County, Bastrop, Caldwell, and Hayes County, that area, uh, you would find that the average median income is below $100,000. So committing $4,000 a month to a house payment is a big ask for a lot of people.
Sure it is. Sure it is. Now, those additional expenses that go with home ownership, you mentioned the property taxes, the hazard insurance. In places like Florida and Texas, you're down there on the coast. I don't know what you guys are going to be able to do about that. I don't know what any of us are going to be able to do about hazard insurance. But a lot of places around are talking about some relief from property taxes. Are you seeing that in Texas? I know we're seeing it in Florida and Connecticut, some other states, Ohio. Will that make a big difference, enough to make housing affordable?
We have had property tax relief the last two legislative sessions in Texas. So the first tax relief took the homestead exemption from $40,000 to $100,000. Now, your tax base on a house in the state of Texas comes from multiple sources. So you don't get that $100,000 exemption across the board. There's just parts of it that you get the $100,000 exemption. Some other parts, that exemption may only be 5% of the value, may only be $20,000 max. But uh, the main the state exemption is 100,000. Then in the now in the state of Texas, the legislature only meets twice a year, or I'm sorry, once every 2 years. Got that backwards. So the last legislative session, which ended in May, I believe, uh, there was a $40,000 increase in the homestead exemption. So that now makes it 140,000. So you do get some property tax relief, and that does help. I have seen tax bills that have been coming in where the tax assessment is higher, but the actual tax amount is lower than it was the previous year. So those exemptions have been helping, and that's really where you're going to get relief. But it's being eaten up by the homeowners insurance costs, and the closer you get to the coast, yes, that gets to be more and more expensive. But I can tell you that even in places like, say, the Panhandle of Texas, where you regularly get storms and hailstorms and things like that, $150,000 house could cost you $2,500 a year in homeowners insurance to cover.
Wow.
So that it's just because you're not on the coast doesn't mean you're exempt from it. And Texas, and all parts of it, is subject to hailstorms. I mean, it's just part of living here. The spring and the fall, that's when you get them. More so in the spring than in the fall, but you do get them.
Yeah, I remember. I grew up in Southwest Missouri, so we were right there in
Yeah,
Tornado Alley with you guys,
yeah, yeah. So you
coming through.
totally understand that in the springtime,
Yeah.
it could be a tornado, it could be a hailstorm, or it could just be a flat out storm with 60-mile-an-hour winds.
Yeah, that it doesn't take much to really cause some damage.
Yeah.
But despite all that, Kevin, you still believe in home ownership as part of the American dream. I guess that's why you're still in this business.
I do. I think that home ownership is a key element to building generational wealth.
Yeah.
And one of the things, especially as I've gotten older, and you look back on your life, you think about legacy and things of that nature, is everybody wants to build some sort of legacy. And legacy isn't becoming a captive industry and having an 8-digit bank account and all of that. Legacy to me really is, family. What have you done to grow that family? What have you done to build that network that you build within your family? You know, how many people will show up for your funeral? That that kind of thing. That's legacy. I mean, when somebody when you talk about somebody and only good things come to mind when you're describing a person, that's legacy. And I think one of the greatest legacies of all times is when the entire family is sitting around the table, not just for Thanksgiving and Christmas, but for Sunday dinners. I think that's a great legacy. And yes, we're much more mobile and families live all over the country, but that legacy is when we all go home. That's legacy to me.
I'm right there with you, brother. That is absolutely right. Kevin, thank you so much for being with me. I'm certainly going to ask you to come on again in the future. We've been visiting with Kevin Breeland. He's a mortgage loan officer and more for Happy Mortgage in Texas. If you're looking for a loan anywhere in Texas, look him up. And Kevin, we'll talk again.
Thank you, Rick. Have a great day.
You too.